The policies you're about to see are in-force active policies designed by us at McPhee Insurance. Some of these policies are several years old, others are just a few months old, and one technically is not in force yet. At the time of this recording, it is in the final stages of underwriting. But the common theme is that all these policies were purchased by parents or grandparents for their children or grandchildren. We've selected a handful of policies and we're going to look at the original illustrations and then compare the original guarantees to how the policies are performing today. And since we know all these people, I might add some interesting or fun to know info as we go. A few things you'll notice is that no two policies are the same, because no two children are the same. You'll notice different premium amounts in different ages. You may even get some ideas of what you could do for the children or grandchildren in your own life. And if there is a certain policy that stands out to you and you'd like to set up something similar, you can reference that policy when you contact us. Maybe it's Catalina's policy or Caleb's or Kalia's. We designed them all. So if there's one in particular, we can certainly look it up and replicate the design for you. Keeping that in mind, let's get into it. The first two policies are Matthew and Andrew's. Their dad bought these policies back in 2010 when Matthew was 12 and Andrew was 8. His plan was to pay $2,000 a year per policy for the first 4 years, and then the premium went down to $800 a year. And you can see that on the screenshots of these original policy illustrations. Fast forward 14 years. The cash value for Matthew's policy was guaranteed to be $14,225, and I'm getting that number by adding the two cash value columns together. The actual cash value in Matthew's policy today is $18,871. The extra $4,650 is coming from dividends that have been paid over the last 14 years. Andrew's policy is similar. His guaranteed cash value in year 14 was $14,469, but the actual cash value in the policy right now is $18,987. Matthew and Andrew are 26 and 22 years old now, and these policies are on track to serve them very well over their lifetime. Next up, we have Caleb's policy. Caleb's dad bought this policy in 2016 when Caleb was about 4 months old. The policy was designed with a premium of $2,000 a year for 21 years, and then after that, the premium reduces to $800 a year. For the first few years, premiums were paid as planned, but the year 2020 brought some unexpected surprises, and for the next 3 years, only the minimum payment of $800 was made. As a result, Caleb's policy has been altered, and a new set of guarantees replaces the original illustration. Right now, the policy is in year 8. The guaranteed cash value was $14,848, but the current cash value is $12,043. Given that $3,600 of premium wasn't paid, and the difference in cash value between the original guarantee and the new guarantee is only $2,805, we can see this policy is performing really well. Now we have policies for Molly, Stella, Lucia, and Francesca. These policies were purchased in 2014 by these children's grandfather. He wanted to pay $2,000 in premium for each of his granddaughters over the next 7 years, and then after that, the premiums decreased to $794, $786, $793, and $792 respectively. The difference in premium is based on the age of each granddaughter when the policy was purchased. These policies are 10 years old now, which means all of his granddaughters are adults. Here's a chart showing the guaranteed versus actual performance for these policies. Also, the cash value for these policies is growing by more than the annual premium each year. So these policies will be very nice gifts for each of the granddaughters when their grandfather decides the time is right. Riley's policy is 6 years old. Riley's mom bought this policy when Riley was 2 years old. The premium is $50 per month, which comes out to be $600 a year until Riley turns 21. After that, the premium is scheduled to decrease to $360 a year. That's less than $1 a day. The guaranteed cash value in year 6 for this policy is $2,639, but because of dividend growth, the policy actually has a cash value of $2,999 right now. When Riley's mom purchased this policy, she bought what was comfortable and affordable at the time. Since then, she's done some serious work to improve her financial situation, and just this year, she added another policy for Riley. There is also a good chance she's watching this video. Hi, Riley's mom. We're proud of you. In 2010, Grandpa Ben purchased policies for his 6 grandchildren. Then, over the next few years, 2 more grandchildren were born, and he purchased policies for them also. All 8 of those policies are performing really well, but I wanted to spotlight one particular one because of the story that goes with it. This is Kalia's policy. She was 8 when her grandpa purchased it. He paid premiums of $2,000 a year for 4 years, and then premiums of $800 each year thereafter. Earlier this year, Kalia contacted our office because she was turning 21 years old, and her grandpa Grandpa wanted to give her the policy. The cash value of the policy was guaranteed to be $14,169 at that time, but the actual cash value was $15,826. And when Kalia pays her next premium of $800, the cash value is guaranteed to grow by at least $1,281. What a beautiful gift Grandpa Ben has been able to give. And remember, he bought policies for all 8 of his grandchildren, so I'm sure we'll be witnessing this a few more times over the next several years as the rest of his grandchildren reach adulthood. Gemma was born in 2021. When she was 12 days old, her dad applied for this policy. Now, an interesting fact is babies cannot be insured before they are 15 days old. So while we could submit the application, the policy couldn't be approved before she was 15 days old. Another fun fact is that Gemma didn't have a social security number when her dad applied for this policy, so we had to give that information to the insurance company later. But anyway, Gemma's dad wanted to purchase this policy for $1 a day, or $365 a year, with the intent to exchange it for a larger policy in a few years. We had done something similar for Gemma's brother a couple years before. For those of you wondering what the minimum is to start a policy for a child that will build cash value, this is a perfect example. $1 a day will start building something for your child. Now, keep in mind, Gemma was a baby when we designed this policy, so if your child is older, you might have to contribute a little more in premium. Fast forward 3 years, and Gemma's dad is ready to exchange this policy for a larger one like her brother has. Gemma's policy was guaranteed to have $702 by year 3. It actually has $707. So we're bringing that $707 over to the new policy, which will have an annual premium of $2,400 a year until Gemma reaches age 21. As you can see, the new policy is designed to be very efficient in terms of cash value accumulation. If we revisit this one in a few years, I'm sure we'll be saying this policy was guaranteed to have a cash value of $11,688, but because of dividends, the cash value is actually greater. But that will have to be a future video. Catalina's grandparents have been clients of McPhee Insurance for years. So when Catalina was born, it was no surprise that they would want to start a policy for her. They wanted to pay $1,000 a year until Catalina turned 21, but due to the IRS regulations, we were only able to illustrate $1,000 a year for 15 years. After that, we had to decrease the premium by $12 a year, and then they could continue payments of $988 until Catalina turns 21. This policy is about 18 months old right now. The cash value is guaranteed to be $1,630. It's actually $1,636. If you guessed that the increase in cash value is due to dividends, you'd be correct. Dividends start small. For this policy, it's just $6. But as we've seen with several different policies, dividends add up over time and can make a big difference between what was guaranteed and what is actually available. Oh, and once a dividend has been paid, it becomes part of the new guarantees and the insurance company can't take it away. Ever. When I was preparing for this video, I jotted down a few policies that came to mind, and we didn't even get to half of them today. But as I was gathering the information, I just couldn't help smiling as I thought about the families each one of these policies represents. These are parents and grandparents who had the foresight to build something that will be incredibly beneficial for their children and grandchildren. These are children who will start their adult life with a financial tool that is performing at a level far beyond anything most young adults would have access to. And to be a part of that process and be able to share a glimpse of what that looks like so other parents and grandparents can envision what is possible and in turn help their children is very special. If you're watching this video and you recognize one of these policies, maybe it's your son or daughter or grandchild, congratulations for building something that will make a huge difference in their life. If you are a parent or grandparent and would like to do something like this for your children or grandchildren, contact us. It would be our pleasure to help you. And as I mentioned earlier, we didn't even get to half the policies we prepared for this video. So if you enjoyed this video and would like to see policies for Andrew, Joshua, Elizabeth, Teddy, Jonah, Jovi, Gabriel, Isabella, Anthony, Amaya, Caroline, and Logan, let us know in the comments.